Amazon, I think at this point, is non-controversial. It is a business that all of us would believe basically has the best days ahead of it. But there's another company that's equally well-known, which half of you in this room would probably believe is one of the most interesting companies in the world, and the other half will believe could be something that is probably something close to either a fraud or bankrupt. And the company we're talking about today is Tesla. Now let's start with the good. The good is unbelievably good. Because at the end of the day, no incredible business can ever be built in the absence of fundamental consumer demand. And the intent in Tesla is undeniable. In 4 years from launching a luxury sedan business, they now captured a third of that entire market. In 4 quarters of launching a luxury SUV business, they've captured 10% of that market. And just by simply announcing the long-term availability of a mid-priced sedan, they've generated 400,000 deposits, which on a look-through basis is equivalent to $16 billion of sales. And what has been incredible for Tesla has been equally horrible for their competitors. BMW 3 Series demand literally fell off a cliff in the face of the Model 3, and a 25% reduction in units sold. So despite all that good, though, there's some bad. While most of us would say, well, selling cars is an incredible business, let's just stick to selling cars, Tesla says, no, that's just how we start. We're going to sell pickups and semis. We're also going to actually launch level 5 autonomy and actually cannibalize our existing business to launch fleets. In fact, for those of you that own Teslas, you've actually already agreed to never allow that Tesla to be used in Uber and Lyft. You may not have realized it, but this is a screenshot from the agreement you had to agree to. They also acquired SolarCity, a business that many people in this room would say defied any shred of industrial logic. They're building a factory, 5.5 million square feet, the largest building in the entire world, visible from space, where raw materials come in one end, cars and machines and batteries come out the other. In fact, it's not just one. They intend to build multiple of these. In fact, it's not actually a factory. They describe it as a machine that's going to build the machines that they ultimately sell. And they also want to see sustainable energy independence through power generation and power storage. Now, all of that was what they announced or tweeted through Q1 of 2017. So the point is, there's a lot of other things that are in the offing here that we don't even know about. And the one thing that we can all agree on, whether we agree with the strategy or not, is that these things are extremely capital intensive. In fact, when we do our bottoms-up assessment of how much money it's going to take, this is an incredibly capital intensive endeavor. In fact, everything that we look at says that it's at least twice the amount of capital in the management case. And management thinks it's about 10 billion of extra capital. We think it's at least 20. So we took the good, we took the bad, we took the ugly, and we tried to model a business. We talked to the company, we talked to analysts, and what we found was unbelievably insightful, which is that it's absolutely unmodelable. So anybody who is telling you that Excel cell D37 is telling you to be long or short this company is completely making it up. And so what we did was we went back to our superpower and we said, let's start thinking about this company from a product and technology orientation. Build a logical framework bottoms up to describe what this business could be. Could it be a 10x in 10 years like Amazon? And as we did it, this amazing thing came to light, which was a historical analog. Another company very similar to Tesla, which had already run the exact same play that we believed it was running. And so I want to explain to you our view on Tesla in the context of another company that you will know, Apple. In 2007, Apple did something that most companies are never able to do, which is to launch something revolutionary. The iPhone was an unbelievable feat of technology, of engineering. It was magical. And what this product did was capture consumer imagination. And it created a tailwind of demand. And what they were able to do was take that demand and start to consolidate an extremely fragmented and highly undifferentiated market. Just remember that a decade ago, that was what was in your pocket. And now look at the phone today and ask yourself, who did that? It was Apple. And the most important thing is that when you consolidate share and you consolidate a fragmented market, you have the ability to expand product scope. What does that mean? That means hiring unbelievably talented engineers to work on the next incremental set of things. And when you do that, you start to create a virtuous cycle. And when you do that, you can do something that's equally important, which is to vertically integrate the critical components of your system that drive long-term profitability. Software and iOS, a retail infrastructure, a developer platform that's garnered millions of supporters. And then what did they do? They vertically integrated from that expanded product scope. They built their own semiconductors and booted out IBM. They started an over-the-air updating system, and they started to move up the stack to build value-added services at extremely high margin. And then from there, they expanded. They launched a tablet business, they reinvented their laptop business, and they launched a smartwatch business. So what happened? They redefined the market. They redefined what it meant to be in the markets of mobility and compute. Massive consolidated share, unbelievable pricing power in the face of eroding pricing power for their competitors, and the most important thing of all the profits, 104% to be exact, which means that they rendered their competitors in a situation where they were losing billions of dollars just to be in the same market as Apple. Now, why we think that's interesting is that what it resulted was a 10x in 10 years. From a $73 billion market cap to $750 billion, they did it. What we think Amazon is in the midst of doing, they did in the last decade. And now let's ask ourselves, is Tesla running the same playbook? Step one, check. If you have a Model S or if you have a Model X, you will agree it is impossible to go back to a traditional combustion engine car. Those cars are horrendous. This car is beautiful. They equally have an opportunity to consolidate mind share in what is an even more fragmented and fundamentally undifferentiated market. What this shows you is nobody has a point of view. And nobody really understands how to engineer a product for mass consumer adoption. And they're also expanding the product scope and vertically integrating. They're building batteries and manufacturing them. The core genesis and brain of the car is no longer mechanical, it's software. They're building these gigafactories. They're building a really novel retail and charging infrastructure. And what I think is probably the single most impressive advancement in software and sensors, Autopilot, which, by the way, they sell for thousands of dollars at basically 100% gross margin. And now they're expanding into adjacent markets as well. They're moving down market. They're building power generation and power storage at scale, and they're building these gigafactories. So all of that is good, except we all know that what they haven't been able to do yet is redefine the market. In fact, it's not clear to many of us, what market are we really talking about? Is it energy? Is it cars? Is it transportation as a service? It's a really complicated story. What we do know, though, is that the early traction of Tesla is tracking very closely to Apple. And this is what is really key. iPhone 1 and iPhone 2 were about cream skimming the early adopters. And iPhone 3 was their breakthrough. That Model 3, the third iteration, was what consolidated and broke down the walls of consumer demand. And what you can see is that the S and the X have set the stage for the 3. And when we do the model of forecasting demand, which is something you can be quite accurate about, what we see is a business that very reasonably in a decade can get to about 5% of the global car market. Now, to put 5% share of the car market in perspective, it is about half or less than half of the leading incumbents, which are Toyota and Honda. And what's great for Tesla is their cost basis and their operational balance sheet is completely different from these companies. They don't have unions. They spend dramatically less on R&D. They don't have pension obligations. They don't spend anything on a dealer network. They spend nothing on advertising. They sell software at a premium service. So their economic model in selling cars is really meaningful. And when you do the waterfall of those economics and think about this business in the context of a Porsche or an EBIT or a BMW, and you look at that multiple, what you see is a business that could be worth hundreds and billions of dollars in a decade. Okay, great. So selling cars, theoretically, upwards of a 7x. And again, all these things that we've talked about before, autonomous cars, transportation as service, energy generation, energy storage, let's give them credit and say that they can do these things half as well as cars. So now all of a sudden we're in this mythical territory of a potential 10x in 10 years. But again, we have this issue of the capital intensity. What if the credit markets hiccup? What if the equity market seize up? What if they just can't execute? Where is that extra $20 billion going to come from? So it's very difficult from our perspective to be naked long or naked short the stock. Instead, what we've been asking ourselves is, how do we share in this potential upside, but frankly protect our downside? And so it comes now to what we believe is our pick for an incredible opportunity, and our 2017 pick at Zone, which is the 2022 Tesla convertible bonds. Why do we love the convertible bonds? It pays a reasonable coupon. It has a reasonable conversion price, which is only about 4 or 5% from here. So what does that mean? To the average investor in the room, what that means is for all of us, we can buy these converts and we're guaranteed not to lose money as long as Tesla is worth at least $15 billion. Now let's put that in context. Today it's a $50 billion market cap. Even if the equity goes entirely to zero, we're protected. Because as long as somebody is willing to pay $15 billion, which is about less than 1 times 2018 sales, or a little bit more than 2 times what Google tried to buy this company for in 2013, we get all our money back. But more importantly, while our downside is protected, on the off chance that this guy pulls it off, we get 95+% of the upside. So let me end by talking about the man for a second. Look, we've all been faced with decisions where we try to use a model to figure out innovation. We tried to do that with Jeff Bezos, and we were wrong for many, many years until we were right. There was a broke Dutch auction for Google. We thought Google was in one business until we realized it was probably the most incredible monopoly ever built. We were wrong there. We thought that Mark Zuckerberg could not make the transition to mobile. The stock got hammered. The models were wrong. He was right. And yet again, we have an interesting character. One of these unbelievably iconic entrepreneurs. While we're trying to figure out how to get an Uber to come to Lincoln Center, he's figuring out how to send a rocket back from space and land it on an autonomous drone in the middle of an ocean. When we're driving our kids around to Chuck E. Cheese on the weekends, he's built a machine that can tunnel under the city of Los Angeles to completely alleviate traffic. And while we're still trying to figure out how to get Netflix to work on our Apple TV, this guy has built a human brain interface so that his thoughts are translated into machines. I mean, the point is that the 2022 converts for us are an incredible way to make a bet on the right side of history, on the right side of change, to participate in what theoretically could be another massive 10x in 10 years, in a way that has complete downside protection. And the most important thing of all is to stand shoulder to shoulder with a guy that we think is our generation's Thomas Edison. Thanks, everybody.